All right, guys, another market recap and a potential look ahead. What's going to be in play or in store for next week and how to look at perhaps positioning yourself. So Wednesday, with the consumer price index being released, was quite a bombshell. I don't think a lot of people expected. Well, look, if you've been playing this game, you would have expected quite a jump in the inflation rate, but I don't think anyone really expected to such a degree how bad the inflation rate was actually. So the US is sitting at about 4.2% inflation right now. I may as well just call you South Africa, because we're sitting at 4%. So, you've got the inflation rate of an African country. So well done. I think what took everybody back was the extreme spike of it. And that really had such an effect on the market on Wednesday. And I'll speak to that now. And everything you could see here was literally a sea of red. Everything apart from one sector. And that was the energy sector was actually in green. Crude oil was in green. Brent oil was actually in green. But everything else, the emerging markets, the developed markets, the frontier markets were all in red. And it just shows you, if anyone ever has any doubt that America is still not the world superpower, I mean, come on. Wednesday, it releases its inflation rates or its score where it's at, and the entire world sank in red because of it. Okay? I mean, America is still firmly in place as the world superpower. I mean, who's China? China can't even do that. America, I mean, when it comes to the economy side of things, if it does bad, the rest of the world will do bad. It shits itself, put it that way. So, yeah, I mean, literally red everywhere apart from energy. And energy was actually in green. As you can see, closing off on Friday, everything is back in green. So how can this be? Because in the US economy, you've been having bad economic news one after another. Job employment was crap in April. Again, your inflation rate now has skyrocketed, and your import pricing is terrible. It's rising as well. So how is it that the economy then can end on green? Well, in a free market, that wouldn't happen. But we're no longer in a free market. We are in a US government and Fed market. It's no longer the free market. It is the Fed market now at the end of the day. So you're dealing with a very manipulated market. And I wanted to speak to a little bit on the VIX here. So the VIX here gives quite a nice indication on fear and greed and where we are. Pretty much everything down here at the bottom would typically indicate greed. Okay, and everything at the top here would typically indicate fear. So a perfect example, if you look at the top, this was in March, April. That's obviously the pandemic, right? The economy, pretty much the sentiments was fear. But it is coming down, and we are starting to look to enter into the greed phase. Just watch that, but that's pretty much where the sentiment, there's still fear in the market, but it's subsiding. And it looks like it wants to get into the greed side of things. So that bodes well for your Nasdaqs, for your S&P500s. So they're still going to go up. Okay. This is gold. As you can see, it's been playing in this kind of like this wedge triangle section. It's hitting this top here. So it is actually poised for a bit of a breakout. Now, I don't particularly like these down triangle. It's actually a down triangle. It's not really a wedge. It's a down triangle, because typically this is actually quite a bearish sign. But having said that, this has been playing right almost to, almost the end of this particular triangle. Call it about 3/4 of this triangle has already been played. So the momentum, in my view now, is starting to shift now to being quite bullish. And I have always been quite bullish for gold right now, and it's looking to break out because there's also another fundamental plays in play, right? Inflation. Gold is fantastic as a hedge against inflation. I've got another graph here I want to show. This is one of the graphs that I picked up on Twitter, and it's a really nice cycle, 16-year cycle, 8-year cycle, and it kind of shows you where gold currently is in the 8 and 16-year cycle. This is still going up. If you can have a look at it. I mean, it hasn't even reached its peak here on its 16-year cycle. So gold is going to go up. This is from the Financial Times, and it was Goldman Sachs that actually said here that for commodity bulls like Goldman Sachs, the answer is a resounding yes. This is for another super cycle has arrived. So they argue the coronavirus pandemic has ushered in a new era of commodity-intensive growth as governments put greater emphasis on job creation and environmental sustainability rather than the focus on financial stability that followed the 2009 global financial crisis. They point to President Joe Biden's $2.3 trillion American jobs plan and Europe's Green New Deal as evidence, both of which will pump huge amounts of investments into commodity-intensive infrastructure and projects aimed at meeting the goals of the Paris Agreement on climate change, which is 2050. Okay, so this is taking commodity as a whole. That's taking oil, and we're going to go into oil just now. But that plays with platinum, that plays with silver, that also plays with gold. Now, Silver can be a hit and miss with inflation. It doesn't always perform well during inflation, but I think with these type of catalysts coming into play, silver should do remarkably well, but gold will certainly do really well going forward now. Hence why I said in my last video, gold is going to be in play now. Bitcoin and crypto will be in play, and I'm going to get to that in a little bit. Okay, so very quickly, oil, right? Oil loves war. It loves war. So, again, we got strife in the Middle East. We got these guys bombing the hell out of each other, and oil loves us, okay? And I'm going to show you guys something very interesting towards the end of my video when we start looking at the markets for next week and how things are going to be played out. But I want to dive now into cryptocurrency. Off the back of Wednesday, cryptocurrency really didn't perform well. It actually came down quite a bit. Bitcoin actually came down a fair bit, and pretty much everyone's, Elon Musk, being an extremely opportunistic person, made a tweet. Tesla has suspended vehicle purchasing using Bitcoin. Now everyone's blaming Elon Musk for moving the Bitcoin, price. I'm just like, I'm scratching my head. It's like, come on, guys. Bitcoin is bigger than Elon Musk. Elon Musk does not move Bitcoin. Now, yes, he may be acting like a douchebag, or in his case, a dogebag, but he's just being opportunistic. He's just looking for attention at the end of the day. I'll show you what drove the price of Bitcoin down, and no one's talking about it. Wednesday, okay, Tether released its reserve breakdown, and only 3.87% is in US dollars. So they gave this breakdown because this is not fantastic news. This is cheeky as hell from Tether. This is borderline bullshit from Tether. Okay, the majority of their money, and they broke it down, but the majority of their money, they've got it in treasury bills. Let's have a look. 65% commercial paper made up a 65% share. Fiduciary deposits formed 24% of the category. Reverse repo notes, 3.6%. Treasury bills at about 3%. Come on, man. Cash then comes at 3.8%. They got commercial paper. This is corporate bonds. 65% in corporate bonds. Come on, man. Tether, where is your risk aversion here? Which corporates have you guys invested into? And if it's stuff like Tesla, are you kidding me? I mean, come on, man. So this was really not great news. And this is what scared the crypto market itself, was because of this type of crap from Tether. This is not great news for stable coins, and I can see the US government is going to crack down pretty hard now based on this stuff. Expect some regulatory changes that are going to be coming into play. Okay, so I want to get back to Bitcoin here. And this is actually from Plan B. This is just one of his relative strength index. And as you can see, Bitcoin is very, very bullish right now. So this was the 2013 model, reached it's pretty much its low there, and then it shot back up. 27 reached its low and shot back up. Now it's pretty much reaching its low now, and it's shooting back up. This is why I also said in my next video, crypto is in play, because crypto is designed, particularly Bitcoin, is designed as a hedge against inflation. It's designed as a hedge. This is why it's better than gold, because gold is only great for inflation. It's terrible. It's crap with deflation. Bitcoin is fantastic for inflation and deflation. This is why Bitcoin is ultimately better asset as a store of value than gold. Okay, guys, moving on. I want to have a look at some movements that's going to be happening next week and the week ahead. Okay, so Monday, we got Lordstown Motors, 10 cent coming into play. This is very important. So this is the housing market index that's coming into play. So a lot of eyes are going to be onto that, but I'm going to show you some correlations just now. This is also very important. The Fed Vice Chairman, Richard, he's doing his Atlanta Fed conference. So of course he's going to be talking about the inflation side of things. And of course he's going to look at calming down the nerves of inflation. So this is very important. Throughout the week here, okay, how's the start? Dallas Fed presidents again. So a lot, there's a lot of Fed talks, but this is also very important. Walmart will be releasing their earnings. Home Depot will be releasing their earnings. I can tell you now, Walmart, they would have done well. Home Depot would have done well because they were seen as essential services during the pandemic, and they would have done well. So I'm not expecting massive loss. If there is loss, it's minimal, but they should actually be in profits. So they would have done well compared relative to other retail sectors. This is also very, very important. And this is, again, minutes recap from Wednesday's CPI and inflation. So, again, all eyes are going to be on that outcome. But apart from that, relatively, and from a US point of view, this relatively quiet. This is from think.ing.com or thinking.com. So I just quickly covered the US there, but Japan, they're doing their Q1 GDP report. Eurozone, we have a look at the UK. This is a big week for the UK, so unemployment rates, they're going to be knocked. If we go down, again, just sticking with the UK, they released their CPI reports. Canada is releasing their CPI inflation. They're going to be knocked. Japan, I think, is also releasing their CPI. If I go here, Japan on Thursday. So this is what's happening globally. Okay, so the one thing I just want to quickly show you for Enja. Now, this is the Nasdaq, the S&P500, the Russell 2000, and then I stack crude oil on here, and I also stacked the the housing market index on here. And as you can see, their patterns are all very similar. And I'm stretching this all the way back from 2016 onwards, right? Their pattern is mirrored, just about mirrored. Okay, so what is that telling you? So when that report comes out, the housing market report, it's going to reflect what's currently happening in the stock markets. Oil drives all of this right now. Okay, it is driving the stock market. It's going to be driving the housing market. And as I said, there's a lot of fundamentals right now for oil to go on a massive rally, on a super bull cycle. And it's going to drive all of these prices. This is the housing market index. It's going to drive that up. It's going to drive the S&P500, the Russell 2000. It's going to drive the Dow Jones. It's going to drive it all up, as well as the Nasdaq. It's going to drive this all up. So yeah, this is Chris Trade. Peace out.